Yes. Am I also visible? Maybe a couple of 2 yeses will tell me I'm both audible and visible. So I'm looking at the chat screen right now. Folks, can you please confirm if you can both see me and hear me? All right, great. Thank you so much, folks. I wish I could read out your names and thank you, but there are too many of you who have pinged me. Appreciate it. Thank you very much. All right, so I think we can start the proceedings. So first things first, welcome everyone to the beginning of week-long celebration that we're having. So QuantInsti completes 11 years, and we are planning to have like a week-long series of sessions, competitions, and what have you over the next 7 to 8 days. And to kick off the proceedings today, we are going to have a panel of some wonderful people who would kind of help us understand the field of quant and algo trading to kick off the week. Now, before I actually get there, I actually want to invite, I would say, the creator or the brainchild behind this whole algo trading week, and the team which has kind of looked at the execution of this pretty crazy plan, which was put together barely 10 days to 2 weeks back. What you're going to see. So let me just call our head of marketing and outreach initiatives, 𝗪𝗲𝗂𝗪𝗲𝗃. So we can have a brief chat, and then we'll move on to the main focus of our webinar. Hi Kshitaj, how are you doing?
Hey Vivek, what's up?
Good.
Okay. Thanks for such an introduction.
No, you deserve all of that. So to tee off our evening, let's begin with why this whole idea of anniversary week. I mean, we've been in existence for like 11 years. I don't think we've done it 10 times back for the last 10 years. So what gives?
Actually, that statement is not true. So we have done a lot of things. So I'll talk about it. But yeah, to answer your question, so basically, one of our primary responsibility is to make people aware about algorithmic trading, and so that they know about this scientific approach of trading towards the financial markets, right? And if people can truly understand what is algorithmic trading and its application in various aspects of trading and investment business life cycle specifically, they can take advantage of all the technological innovation that is happening right now. You name it, like data science, machine learning, blockchain, automation, anything, right? Now this entire concept sounds very complex, algo trading, right? But if you consider it, its implementation end to end, then only. Let's say, for example, it's like most people assume that it is a complete end-to-end deployment, which is not necessarily true, right? So if you break it down, like there are various applications of algorithmic trading that can easily be picked and used in our daily trading and investment business routines. Okay, and so basically, as an educational initiative, as an educational institute, we have a responsibility to make this learning journey easier, right? And that's where all of our educational initiatives come into picture, right? So if you know about our so like all of us, like a lot of us know, right, we offer some of the best algo trading courses out there in the world, right? And it's really an amazing to see all those testimonials pouring in towards the marketing team, and it's very positive, like the kind of energy that we get out of it, and it motivates us like to see such love and support. And so if I talk about, like, coming to your question, why we did not did it like we did not conduct this in last 10 years. So actually we wanted to make algo trading more accessible and take it mainstream, right? And in order to do that, if you look at, we have hosted more than 50 webinars in less than last 3 years. Okay, and that also includes a 3-day workshop. So you were also one of the speakers in that workshop, right? So that was there. We have 2 free ebooks, like 500, 600 free blogs, And then in fact, I mean, if I talk about our Quantra courses, 20%, 25% or more than that courses are for free, right? So if you look at this, the kind of contributions or the kind of love we have got in the community, and the way we have created content in last 10 years, it's actually not that we haven't planned this, but recently, we wanted to do something more, much more than that what we are doing right now, and a week-long learning festival. So hence we reached out to some of the best people in the industry and invited them to share their knowledge and common platform. And we also got some very positive responses. In fact, we have this entire schedule packed for last from, if I consider today, for 8 days, right? So and then there couldn't have been like much better time than to host this Algo Trading week, but around our 11th anniversary. So that's why that idea came, and then we worked around it, and somehow we are managed to, in a very short period of time, we were able to get all of this together. So I hope all of our audience is going to enjoy these interactive sessions for the next 7-8 days. And yeah, I think that's about it. So thank you for the support and love that everyone is showering in us, and that motivates us really. So thank you, guys.
Okay, awesome, Kshitij. Thank you for that explanation. It was interesting. I'm sure even our audience would have gotten some idea why we are doing this week. All right, so now let's move on to the main agenda for the evening. And so let me start with giving you a short background about myself. I am 𝗪𝗲𝗀𝗃𝗃 and I head the content and research team here at QuantInsti. So in fact, I've been here for about 4 years now, and it's been a pretty insane ride. So just before that, I was a research scholar in Canada for a few years, and I've been here. I've literally seen, the program itself, whether it's EPAT or various other educational initiatives that we do. They've grown in scale, they've grown in size. We've got some wonderful people that we work with who help create the kind of content that we do, that we then broadcast to the world. All right. So now let's specifically talk about the panel. So I first want to invite Ishan, who heads up Quantra content team here. Now, Quantra is this self-paced learning platform where we create these short duration courses, which are very hands-on, in nature. They also have this live trading integration, both in a paper trading as well as a live trading environment across platforms and across multiple markets. US, India, FX, and others. The second person who's going to be part of this panel is Nitish, who is the co-founder and CEO of QuantInsti, which is one of the world's leading algorithmic and quant trading training and research institutes. And we have, I would say, perhaps the biggest, or definitely one of the biggest quant and algo trading community globally, not just in India. We also have Pradipta, who is the vice president here at QuantInsti, and he leads our Blue Shift initiative. And not just that, he also looks at the technology piece here. Blue Shift, in fact, is one of the few platforms we have out there which offers a complex event processing engine to enable users to build any kind of strategy across multiple markets, US, India, FX. In fact, you can do it both in a programming, that is a Python-based environment, as well as a visual coding, or what we call a no-code kind of environment. And last but certainly not the least, we have Rajiv, who is the co-founder and CEO of 𝗨𝘬𝐻𝗀𝗃𝗃, which is one of the largest high-frequency trading firms in India. It also happens to be a clearing and trading member of Indian exchanges, and a very big player in the options desk, and contributing huge amounts of volume through its prop trading every single day in the Indian bourses. So I think it's a great opportunity for us to learn from these four wonderful minds of this field. So now I'm going to start with Nitish. I know Nitish now very well now for what, 4 or 5 years.
Hi, Rick. Hello, everyone.
Yeah, it's slightly odd that we are having such a formal chat, considering all the informal chats and via text and phone and whatnot that we have. But nevertheless, let's do it for our audience. And I want to jump straight to the meat of the subject, which is what are the kind of skills and what are the kind of educational perhaps backgrounds you need to even begin your journey in quant and algo trading? So yeah, over to you.
That's
Nitish, I'm not able to hear you. I'm not sure. Let me just check.
algo trading. Before you get into quant and algo trading, I think it's a bit natural that the first thought comes in from the perspective of skills. But I think before skill building, first thing that needs to come in is the alignment part. And when I say alignment, I'm not saying that it has to be the people who are looking to create or who has got some financial markets background by education or have been programmer all their life. Or it's not, I'm not talking about that filtering, but more in terms of the alignment, in terms of the interest and the passion, how much time and effort you're really willing to put in. It will need, if you're getting any skill, any new trait, not just trading, but anything actually. So it needs at least few thousand hours of your time and commitment over a relatively short period of time. So if you have that passion for something, then I think it's worth exploring it. And then you start exploring that what are the things or what are the skills that you really need to make big in this domain, or really become the best version of yourself and a massively competitive player with the rest of the world, right? So as an individual, as a team, whatever it is, right? So I think when it comes to the quant and algo trading side, for people who are really driven to pick on this, there are three things, three pillars that it stands on. So one is your statistics and econometrics, right? Which is essentially the key foundation of everything that you will be doing in quantitative trading, to be honest. And then you have financial computing and programming methods, right? So it would also include some bit of understanding of the overall technology, right? And then the third piece is the financial market acumen. So you need to have a very strong background about the understanding of how the financial markets work, right? So some of the most basic but extremely powerful strategies are simply created by people who know a bit more about the markets. Nothing insider, I'm not talking about that, but more in terms of having a very clear understanding of how the new regulations, how the new things are going to impact things, or what kind of new infrastructure options are coming in, right? So all those things are important. So having a clear understanding of market microstructure, and that becomes quite important. So that's there. And when it comes to the statistics and programming, they both put together, they enable you to actually execute those ideas or those thoughts that will come in through your acumen in the financial markets domain. So it has to be all three together. If you are missing in any one of them, it would be difficult. But you need to have a bare minimum qualification criteria that you have to reach before you can start in this domain for each of these three. And of course, you got to have expertise in one or two of them at a significant level. So that will prepare you well.
Okay, that sounds like a pretty tall ask. So I think this is a good time for me to jump in and pester Ishan to answer this, because Quantra has all these short duration courses. So Ishan, you know, what are you trying to do with Quantra courses? Again, it's weird but formal setup when we are chit chatting, but let's do it for the audience. So yeah, you know, taking off from what Nitesh was telling us, clearly you need some pretty hardcore skills to you know, get comfortable with quant and algo trading. So how do these courses, and what are you guys trying to do when you create these courses? I mean, how do you help to build these skills to our users? And what are you hoping they can do after they complete, let's say, 10 hours or 12 hours of some given course?
Yeah, so let me answer the second question first, and use the principle of inversion, like how the skills help you achieve the outcome which we expect from the user. So typically what we expect is the user who is going through our courses, after the course is done, he is in a position to create an end-to-end strategy which he has learned through the course, and maybe paper trade or even live trade on some of the markets in which he is interested. So this is a very big statement to make, right? Going through a course and trading strategy. But that is what we plan to achieve, and how we came to achieve. Like, why did we decide like we want to give this kind of exposure or experience to our audiences? What I've seen is a lot of people use some kind of a discretionary trading, or they just don't follow proper process while trading, and even there are a lot of anomalies which are not explored, but they just rely on some kind of tips, tricks, and other stuff to trade in the market. So to bridge the gap, to make them showcase the importance of quant and the various maths and statistics part and various other things, that's where this course comes into the picture. So let me take a simple example. Like, there's a course on momentum. So it will deep dive into various literature which is out there in the in the public. It will talk about how people have explored this anomaly and how you can explore that. So typically what Nitesh mentioned, like you need a skill of Python, right? So we actually take it one step ahead. We not only teach Python, but also show you how you can use the power of Python to backtest or verify your hypothesis, and also based on that you trade. So this is like a cliche statement, like not a lot of people will look at rear view mirror and adjust their car. But if you have a view like what has happened in the past, you'll be very much cautious or aware of how to trade in future. You'll not make the same mistakes which are made in past. And with that power of backtesting, we actually do a lot of backtesting. We do a thorough analysis. We see that is it just due to luck, or is there some value in it? All this is incorporated, and finally there is a link where you can go to Blueshift or any other platform of your choice, paper trade and live trade your strategy.
Okay, all right. That's an interesting approach. Cool. So let me now get our third illustrious panelist, Pradipta, on board. So hi, Pradipta.
Hi, Vivek. How are you doing?
Great. So Pradipta, you've been connected with systematic trading, and you've been talking about it, and literally living it for over a decade now. And in QuantInsti, you specifically look at these research and live trading platforms. So from a retail user point of view, how do they benefit from these platforms? I mean, why not just go for these canned strategies that you find in so many places these days? What's the point of these kind of platforms?
The issue here is that, of course, you can go for ready-made strategies, and there is no absolute any harm in doing that. But there are two aspects here. The number one is that there are three segments in the markets, and they have different source of alpha, different source of how you actually make money. So the first segment is, of course, our sister concern, the HFT funds, and they trade at a very high rate, and they extract alpha, which is a very different kind from others. On the very high end, you have large funds and the hedge funds, and they trade at a very large scale, and they have a very huge research base, and they have access to much detailed information that a retail can get. So their extraction of alpha is again a very different source. So in between, so maybe something like trading a few times a day to trading a few times a week, around this range, if we're talking about trading, not investing. So this is the range for retail, and there are lots of different things that can be done here. And what is good for you, not necessarily is good for me. The risk of a trading strategy is not only just standalone, it is not just the numbers that you look at it from its performance, it's also in relation to what your position is, what is your overall financial risk position is. So this is one thing that you need to test any strategies, no matter whether you have created it or you heard about it, right? So that is one part. And of course, the other part is that being retail doesn't mean that you don't have any access to alpha. So as I mentioned, there's this small part in between the HFTs and the big guys, right? So this is typically it's not a scalable place to mine for alphas for these big guys. So this is where you can have your stand, provided you find your niche. And to do that, you of course need some tools, some platforms, or some system where you can systematically research. So this is the reason for existence for Blue Shift.
But why not just build it? Why should I use a platform that's been built by QuantInsti?
I'm glad you asked for it. So I think everyone who started, they definitely should give it a shot, and they should try to build. And if you do, then it will be very easy for me to answer. Because building a platform involves a very different set of skills compared to building a strategy or trading. Building a platform is essentially software development. It's essentially about software engineering, and also it is about ops. It is about maintaining your data ops, maintaining your development, DevOps. So it is a lot of boring and very meticulous set of processes that you have to carry out, and it's a full-time job. So you either do trading or you build trading platform. It's very unlikely that you'll have enough time, especially if you're a retail, if you'll have enough time to do both. But yeah, so if you try it, at least to give you a very good idea, and then of course you can switch to a more established platform.
All right. Cool. Thanks for this. And now I'm going to get our final panelist, Rajiv. Rajiv, hi. Are you hear me?
Yeah, so I'm having some configuration issues, and then I'm not able to get my camera on, so I'm sorry for that. So let me try that. But meanwhile, let me answer your questions. So yeah, go ahead.
Sure. No worries, Rajiv. Even hearing you speak on stuff is going to be pretty good for us. All right. So Rajiv, you are, I would say, compared to the rest of us on this panel, you literally are out there trading day in and day out, right from the time the markets open until they close, sometimes even in the aftermarket hours. So where do you see quant finance go from here? Is it considering the this information revolution where everyone is learning so many things? Is it going to get harder to make profitable trades? Are markets getting more efficient? I know I'm throwing like a lot at you, but yeah, please.
So this is a very good question. So Pradipta just mentioned how trading could be bifurcated into different styles. So for different styles, the impact of developments in the market are different. So before I even answer this question, let me try to give an analogy. So recently, for example, advances in computing power, advances in machine learning, and so on enabled design of chess playing software programs, wherein they now let the two chess playing programs keep playing against each other and then devise strategies on their own. So what has happened is now human chess players learn from this ML chess programs. So the chess programs devise strategies, and then the human chess players learn from it. Something very similar is and would happen in the quant trading industry, especially of the style that we trade. So for example, people who are doing long-term investment using some quantitative methodologies, probably the way that industry is impacted, it could be like introduction of things like alternate data, sentiment analysis. So these are things which were not mainstream a few years back, but these things have become mainstream. Now coming to mid-frequency and high-frequency trading. So the amount of volume on the exchanges have really shot up in the last one decade, and the kind of strategies that existed, that has also changed. So traditionally, people used to say, for example, look at only the trade prices, end of minute prices, end of hour prices, end of day prices. Now people look at buying and selling pressure at each and every tick. The amount of information is like just so huge. One exchange alone, if you want to analyze the data, that is like a few hundred gigabytes of information. So to be able to make insights out of it, now the kind of skills required are different from the kind of skills that would have worked, say, 5 years ago or 10 years ago. And that is where I feel a constant need to work on upgrading one's skill, where an institution like QuantInsti comes into play is very relevant. So in HFT and in medium frequency, big data is going to be critical. In long-term investments, things are shifting towards alternate data. And your question about competitiveness, whether the markets are becoming more efficient, definitely leveraging the power of technology, the linkages become evident. So basically, the lead leg, the efficiency has become much faster. So automation has made it much more easier for people to scale up. And because scale up has become much more easier, so people can express all these viewpoints, execute them much more efficiently. Therefore, price relationships, the inefficiencies do not stay for that long. So obviously, people who are doing high frequency and so on, the competition is definitely becoming much and much more difficult.
All right. Okay. So clearly, these advances in technology are impacting everyone, including the high frequency folks, right? With the kind of data that Rajiv was referring to. So now let me circle back to Nitesh and talk a little bit again about our retail investor audience. So now there are, I'm sure, a lot of people among our listeners here, and perhaps even people who will watch this video once it's out there, who want to enter. They are standing literally at the edge, wondering, should I get into this quant business, quant algo trading, and they decide to dip their toes in it. What are the kind of mistakes that these guys are most prone to make, when they start their journeys here? And what would you suggest that they should guard themselves against?
Interesting point. So I do try to interact with a lot of our users, like very frequently, as it can be, and few things that I have seen, which a lot of people pick and then make some mistakes and then come back and learn from those mistakes. I think the key mistakes that people try to do is that they try to implement too fast. So, and honestly, there's nothing wrong with it, but the problem is that that mindset that till the time I do not put it with the real money, it's not going to, it's not real, and it's not something which will help me learn, or I will, even if I lose money, I'll be learning something. That's a old adage, yes, but maybe not very relevant, especially when it comes to quant and algo trading. The point is simple, that you got to test rigorously a lot, and you have to understand your strategy, why your strategy is working. Speaking to a guy a few days back, and one of our users, and he mentioned that he saw some strategy which looked pretty awesome. He could understand the code and other things, so he picked the code and executed that and ran that, and ended up losing a significant portion of the capital. Now the error probably there is that you're trying to pick things, and in the haste to implement or execute in the real market, you are not going through, you're making a cardinal sin of not understanding what you're going to run, right? Not understanding what you're going to run is not just about understanding the code, but understanding that why this strategy should be making money, right? That's a very, very important question that anyone who is running a strategy, or even as basic as trading on a tip, buying a stock, they should know that why it is going to make you money, or why is it going to be successful. Nothing happens like chance. By chance is a different story if you want to play that card, but then you have better odds at playing roulette, right, than in the markets probably, right? So you don't have to position size, and you have to, but it's not that complex as it is in the markets. So so you have to try out. It's a slow and boring process, honestly, and what I have seen is that most people do end up making money only when they are totally bored, like that's so process driven, and so so we can say thrill is like taken out of the whole trading idea, right? And then the systems or the people who are running it, they start making money because it's so boring that you don't really you're just focused on the things that can help improve the probability of your strategy success, right? And that needs a lot of inputs, a lot of alpha ideas, a lot of testing, a lot of risk management, a lot of things that you have to put together. It takes time, and you have to be prepared to put that kind of time. It does not happen too soon, but it does happen. So like we have seen so many people coming from very different backgrounds, some from tech, some from totally non-tech, some from totally non-market, all kind of people, right? But those who stick around in terms of have the patience to test out things and try out things, it works, right? If you try to implement too fast, it can be a problem. That's the biggest problem, or the mistake, you can say, if that's the right word, that I see that you can do while you're just starting off.
So yeah, it seems like patience. I think that cultivating that patience when you start learning something new, and then
you can patiently keep on losing money also. So I'm not saying just patience, but patience with clarity, as in why you're doing what you're doing, as in why you're. So basically, you should have the idea of why your strategy is going to make money. There are millions of, like, every firm, every mid-sized or a big HFT firm will have millions of alphas, right? Why you would be able to beat them, and not just them, but like a billion other people in the world who are probably some way or the other active in the market through their fund managers or by themselves, whichever way. So why you are going to beat them collectively, right? So that's important to know.
Okay, interesting. All right. So Ishan, so now again, in our audiences, there'll be lots of people who have been doing some level of discretionary trading. Some of them are professional traders. Some of them are, doing it on the side. They have day jobs and they trade now and then in a manual sense. So they get tips, they read something in a newspaper, and they do stuff. So, and they are now thinking of, getting into this whole systematic quant trading domain. So what would you suggest to them, like in terms of a path, the steps that they should take in order to become quant traders?
Yeah, I think they should start from one of our Quantra courses and begin this glorious journey. But okay, let me answer on a more serious note. So ideal way is we are seeing this gradual shift, not only in India or US. I think across the globe, people are shifting and they are appreciating the value which this quantitative techniques and systematic trading can bring to them. So I think the first thing which needs to be done is to get the clarity in the mind that this is something which can be beneficial. I think one of the best way people discover this is by losing money by their own style, and then reading about how successful people are trading, and then they discover this. So I think you can shorten your journey by not losing money and reading beforehand and how a successful trader makes money. So you will lead to this path. Once you have the motivation, which is there, like this is the right path for me, then I'll just tie back to the answer which Nitesh said, like you require a set of 3 skills to excel in this. One is the hang of the markets, or how do you trade in markets. Second is you need some kind of a basic elementary maths and stat skills, so that you can basically discern, or maybe you can come to a conclusion what things are due to chance or what things are due to actually something which is there for you to take it. And the third is programming, because today we are in a world where there's like plethora of data which is out there, And there are a lot of new age technologies like say machine learning and even say reinforcement learning are out there, which are for you to exploit. And all this can be easily done if you're aware of some programming language such as Python. So let me give you an example. Also tie back to what Rajiv said. So we have a course reinforcement learning on Quantra, and in that, while creating the course, we actually ran the algorithm. And what we discovered is the algo learned the strategy on its own and was trading in a way like we didn't understood like anyone would trade that, right? For example, some of the days like when there was this fall in COVID, it was actually not going short or squaring off its position, and suddenly it started buying. So we were very surprised, like no human trader, given that so much negativity which is out there in outside, like stock market is going to crash, banks are going to go bankrupt and other stuff, this algo started buying. So what we learned from this is these are the algorithms which can learn on its own, and there's also something which we as a human trader can learn from it. So this is, I just took you to the other extreme, but your answer was how do we start? So how do we start is get these 3 skills which you can easily acquire through a Quantra course or any other platform. We also have a lot of blogs, webinars, and a lot of material for you to get started. Once you have things in place, experiment with simple strategies. It can be very simple, like a gap up, gap down strategy, or a simple buy and hold strategy, which you tend to have some factors on which you select which stocks to buy, some kind of a simple screener which is driven by quantitative approach. Once you get a hang of this, then you can consider introducing various factors like say there's mean reversion factor, momentum factor, low wall factor. All these factors can be added, and then you become a proper quant trader.
Okay, great. So let me now go to Rajiv. Based on all the stuff that I've been hearing from the rest of you guys, Rajiv, even so now, let's suppose I've become this, ninja quant trader. I've learned to control my emotions and stuff, right? I've learned to systematically create approaches. I'm sure we are still humans, and there are still room for us to make mistakes. So, what are the typical mistakes that quant traders do?
Okay, so first is often there are regimes in the market, and then often there are biases in our strategies. So discovering these biases in the strategy often becomes very, sometimes they stay hidden. So for example, you might build an option trading strategy, and then it might benefit from, say, earning theta in the market. Now inherently you have a bias towards being short Vega, and then say the realized volatility being lesser than implied volatility and things of that sort. So you might think that you have built a wonderful strategy, and then there might be an inherent bias. So it could work well in certain regimes, it might not work well in another regime. So when you do the back testing, being able to do it in such a way that you do it with a good universe, that is the point number 1. Point number 2, explicitly checking whether your strategy has some bias to certain regimes, and that is point number 2. And there is one very funny thing that happens with almost most new joinees that join our HFT business. So it's not even a very big mistake, but then it happens almost frequently. So basically, being able to model the action at the exchange at the time of activities. So typically, when our new high frequency traders join, a lot of them, they come and say that, hey, I found this alpha, this makes me a profit. I found this alpha, another alpha, this also makes profit. And then when we look into it, we realize that modeling the activity as basically what you see as an opportunity is not truly an opportunity at the exchange, because at the time of big movements, the exchange just becomes like overburdened, and then because it's like a lot of activities happening at the exchange, you get queued, and then your order gets picked up very late. So basically, when you're building high frequency strategies, you need to factor in the fact that if you see an opportunity and then you send an order, unless the opportunity stays for like quite some time, you need to be able to model how long will the opportunity stay for the kind of activity that you are seeing to be able to really get it or not. So that is one minor thing that almost all quants that join 𝗨𝐬𝐡𝐚𝐧 bump into. So, but at a broad macro level, I would say that a lot of us being able to identify the biases and then the regimes which alphas work in what regime, that is critical. Yeah.
Okay, great. Awesome. So let's do one thing. I'm going to now go to each of you and just get your maybe parting words. We're kind of running out of time. We have a few other things lined up. So let me start with you, Pradipta. Any parting words for our audiences who are all, you know, kind of interested? Obviously, they've logged in on a weekday. In some parts of the world, it's evening. In some parts of the world, it's again a weekday morning. So what would your advice to them be? Pradipta, I can't seem to hear you. I hope others can.
Sorry, I was on mute. So I not say that it is parting word. Just two things I just like to highlight. Number one is to repeat what just now Rajiv said. So this mistake I have also faced in my career, and of course I was not into HFT. I was in long-term strategies. And we have seen that almost always someone who joins, they come up with a fantastic alpha. And when you try to implement it, you figure out that it doesn't really work. And in most of the cases, this was because of look-ahead bias in our case. So some sort of look-ahead bias that you never couldn't imagine, they just creep in. So this is one of the things you need to keep in mind, look-ahead bias, and the fact that if you look at a chart that just straight line goes out, then probably there's a very little chance you are extremely lucky you found something, but most probably it's a wrong backtest.
All right. How about you, Ishan? Any words that you want to share with our audience? Advice, anything that comes to mind?
Yeah, I think on this parting note, I'll just end on a serious note. So one of the case study which I also cover in my EPAT lecture is and which conveys two important messages, which is not to be over reliant on backtest and to take leverage to a limited extent. So I take this famous case study of LTCM, which is long-term capital management. So there were like this Nobel Prize winners who were running this shop, and they just blew up because they over relied on backtest, which made them overconfident to take more leverage, and they just could not sustain the madness of the market, and they eventually had to go bankrupt. So I will say, yeah, all this techniques comes with you not acting over smart, like taking over leverage, and not over relying on the backtest. So yeah, that's it from my side.
All right. How about you, Ritesh? What would you want to tell our audiences?
I think this backtest one is a definitely interesting one. So what Pradipta was saying, that all those biases that used to come in, and what Rajiv was also saying, and what Ishan is also saying, probably is the same point, that if you see a strategy giving you 200%, 300%, 5,000% returns, run away, run far. Just keep an eye open, just in case if you do see actually there is maybe a very slight possibility, but it's going to be extremely low possibility that it is going to give that kind of return. That's one. Second is what I'm saying, what I just said, the first point has to be normalized with something else, which is called risk. So if it is a 200% return at, I don't know, you're taking 150% standard deviation risk, I don't know how you'll lose more than 100%, but still, if you're getting that, so that's again something where you need to understand that returns in itself does not mean much, right? So returns at what cost, right? At what risk that you are generating. So be you're measuring that through Sharpe or sorting or whatever ratio that you're using. But the simple point is that what is the money at risk that you're putting in, what is the estimated risk, and what is the estimated return. So you have to look at those two factors, not just one. Third thing is that when you do backtest, there are so many different biases that can creep in. Look ahead, like Prito said, or survivorship, or so many different biases which are out there. You might, if you don't do it right, you might end up, and you will of course end up seeing frivolous results, and you might lose faith in backtest, and then there will be someone telling you that, hey, backtesting doesn't work, you don't backtest, you do something else, whatever. I don't know what to do, but then that's again a hazardous word. That's not true. It doesn't mean that if you are not doing it right, does not mean that that thing doesn't work, right? So it's important that you're using the right kind of tools and the right kind of methods to do it. And the good part is that with the rise of open source systems and data science libraries which are freely available now for a lot of people, I think it is really, it's possible to put them to use. You can, if you learn them right, if you can use them in the right way, it is really possible to get things in your favor, right? So it's probably one of the best times. You can say one of the most probabilistically positive times for most of the traders who are looking, who can understand the language of data, who can interpret it right and feed their systems with that. I think it's a great time to use that. The overall environment, overall ecosystem is out there. If I was to say that, hey, I have to train my data using a server, as a retail, my story would end just right there. I don't have 300,000 rupees or about $5,000 to spend to get a server, but I can now go and rent it on per minute, per hour, per second, per day basis on AWS or DigitalOcean or whatever different clouds infrastructures are. So the possibilities are now possible. So do try that, and yeah, it would be fun, I'm sure. Try it nicely.
Great. And Rajiv, let me ask you the same thing. Any words that you can tell our users?
Okay, so I don't want to scare you guys, but so let me start this way. So trading is not a zero-sum game. When two people are trading against each other, it's not a zero-sum game. Okay, so one party would make a profit, one party would lose. The party who loses, they have lost. Now the party which wins, they also have to pay transaction costs, they have to pay taxes, etc., and so on and so forth. So it's not a zero-sum game, and therefore doing well in trading is like walking a very on a thin edge. Okay, so to be successful, therefore you need to be very good with the building blocks of it. So you need to be very proper with your understanding of fundamentals. You need to be very good with your understanding of why you are doing a trade, the objectives, and then why and the way you are evaluating how it did historically, doing the backtest of it, doing it in a way that there is no bias in it. And and then even when you become successful, there are always those challenges, the emotional part of it, the fear and greed part of it, right? So so being successful in trading is difficult. So you to be successful, you need to do it in a very objective way. You need to do it in a systematic way, so that the emotions, so if you do it in a subjective way, then your fear and greed are going to always impact your trading decisions. So you need to do it in a systematic way, so that all these emotions do not impact you. Now, to be able to do it, you definitely need an objective methodology. Whether you will improve your skills through a course like QuantInsti, or whether you do it through any other source, do that first, because you don't want to get into the markets, lose money, and so on. And I would want to commend all of you guys, because I'm the only one who's not a means you guys are full time into QuantInsti, right? So, and then the traders who join 𝐈𝐬𝐡𝐚𝐧. So all of them, when they join 𝗲𝗏, means we do a significant part of the volumes on the exchange, and all of our traders first do the course from QuantInsti, and then not just that. So sometimes people they say that, hey, Rajiv, can you, because QuantInsti is the sister concern, there is this course on Quantra, a small course on Quantra, which we think is going to be beneficial for us. So can you get the cost waived off because it's a sister concern? So live traders want it. Okay, and then it's not just us. Even our competitors do the training from QuantInsti. So kudos to you guys. So well done. And then for everyone who's listening, I would just say that trading is not a zero-sum game, and you definitely don't want your emotions to impact it. So do it in a very objective way. So which is try to learn all those building blocks properly, and be aware of all the fallacies that exist, be aware of the different types of strategies that exist. So whether you do it for QuantInsti, do it anywhere, but investing on yourself, investing in education is a very important thing.
Okay, so some very interesting insights from all of these four gentlemen. So now, so the next thing on our on the agenda is I'm going to walk you guys now quickly through the competition. So at the beginning I said that for like a whole week we are having different speakers. We have other discussions of similar nature on other topics. We even have a masterclass lined up. And the other thing we have is a competition. So let me put my screen on share and walk you guys through that.
This I think we'll be taking the questions after your competition, right? After your walk. Okay.
Yeah. So I'll pick up a few questions and lob it at you guys once I'm done with the walk. All right. Okay. So let me put my screen on share. Okay, I hope my screen is visible to everyone. So this, by the way, let me just check if my screen is visible. I'm looking at the questions. Is my screen visible, guys? Some of you, if you can just ping and okay, I heard someone say yes. All right. Okay, so it is visible. All right, so let me go to the anniversary page. So if you can see the URL right at the top, it says QuantInsti.com Algo Trading Week. And if you scroll here, so you need to go and register by clicking on save your spot and stuff like that. That is something you can do later. Let me get specifically into the algo trading competition. So if I click on the get started link here, it takes me to the competition page. All right. So as you can see, it will say that anyone with an interest in learning the basics can get into this competition. It's essentially for people who are individual traders, programmers, anyone who wants to kind of get started learning, as well as even if you have done a little bit of it before on by yourself and you want to just brush up your knowledge, you can try your hand at this. So the competition starts actually day after tomorrow. So it opens today, and the first I would say quiz happens on the 25th of this month. So the format of this competition is that there are going to be 3 quizzes, 3 tests as we call it, which cover the basics of financial markets, the math and stats part, and the programming and machine learning part. So this is 1, this is 2, that is the math and stats part, and the third is programming and machine learning. Each of these quizzes is going to have 20 MCQs. There's no negative marking. It's going to be open. So these quizzes are going to be open for 8 hours in total. So it's 4 p.m. to nearly 12 midnight IST, the Indian Standard Time, and the corresponding times in other time zones on the specified days. So you can take each quiz just once. Now we've mentioned here that you need an hour available to take it. This 1 hour is not the duration of the test. We've mentioned 1 hour just so that you have time to make sure that you are able to read all the instructions, take the test and stuff. The test is just about half an hour. So even I guess about 40 minutes should do, but 1 hour is, just we've got some buffer there. We've got built in some buffer there. how you can prepare for it is we've also shared some resources. I'll talk about that when we go there. So the quizzes actually happen on the 25th, the 27th, and the 29th of this month. So as it's mentioned here, the competition ends on with the third test or the third quiz, and we announce the winners on September 30th. So let me first talk about the specific dates, and then I'll talk about what we are trying to do. So the first one is global financial markets. So in case you want, you can take the test without going through any of this material. But if you wish to, we've also shared some links here for you to go through. So some of these could be courses, some of these could also be blogs, and you can go through them. It covers various topics like exchanges, market indices, financial instruments, options and futures, and others. Now the links that we've shared are, I would say, indicative ones to prepare for the quiz. You are free to prepare it using any other resources, or not even if you're very comfortable with the area. You don't even need to spend too much time in the preparations bit. Nevertheless, that's what it is. The test, as I said, is on September 25th at the specified time. Then, so we consider today to be day 0 of the algo trading week, which is mentioned here. Day 1 is for the preparation if you want to. Day 2, which is day after tomorrow, is when the quiz happens. Day 3 is again for the preparing for the second quiz if you wish. So again, these are a list of topics. You have topics like permutations and combinations, probability, Bayes theorem, and other topics that are listed here. So you can go through the resources if you wish to, or just come and take it without preparation if you're very comfortable with these topics. Day 4 is when the quiz happens, September 27th. Similarly, you have day 5, which is the third part, which has Python and machine learning. Again, we've shared a bunch of links. And on day 6 is when the quiz actually takes place. Now, the way this competition works is you need to, so we will be looking at the cumulative score across all of these 3 quizzes. So we are going to create this leaderboard that will be updated, I would say, every 24 hours. So the first quiz happens on 23rd. So we will update the first leaderboard on 24th. So you'll have the top 10 to 15 people on that leaderboard. Once the second quiz takes place, we will add the scores of the first and the second quizzes, and you will have an updated leaderboard on September 26th. So essentially, every alternate day, we will update the leaderboard, right? And eventually, the competition winners will be announced based on the cumulative score of all 3 quizzes. So obviously, you increase your odds of featuring in the top 3 or the top 10 if you take all 3 quizzes, and if you take them well, more importantly, right? So that is as far as the quiz goes. You can click around this and take a look at it later. So that's pretty much it with regard to the quiz. Now let me call back my panelists. I'll take out my screen from sharing, and let me look through some of the questions that have come my way, and I'll lob it at our panelists. Okay, an interesting question that's come up is what is the hardware needed for a quant setup? So maybe Ishan, you want to try that? What is the hardware setup you need?
Yeah, sure. So it depends on the kind of strategy which you're trading. For example, we can roughly bifurcate the strategy based on, say, how frequently you are trading. So typically it can be high frequency, medium, and low frequency strategy. So on the lower end of the spectrum, where you are actually using low frequency strategy, the hardware which will be primarily requiring is more on the research side. And the execution hardware could be very simple, like the laptop or the computer which you're using. You can use that, or even you can say rent a minimum configuration on the cloud which is there to enable with you the execution capability. So again, I think if I just further demarcate like hardware required for research and hardware required for execution. So on the execution side, it's the bare minimum. I think nowadays, I think with I think Blueshift, you can just run the strategy by just running through a cloud by just using a browser. That's all you need. And even if you want to run on your desktop with packages like 𝗫𝗲𝗄𝐻, which connects to Interactive Broker, it can connect with the basic system which you have. And when it comes to research capabilities, unless you are not doing a very hi-fi like a neural network or even advanced algorithms, machine learning, the simple strategies can run with, again, the minimum computer, like the bare minimum, like 4 GB and minimum hard disk and configuration laptop should be good enough. Now, when it comes to say high frequency and medium frequency, I'll just pass this question to 𝗪𝗲𝗯𝗶, like what is the hardware requirement for say high frequency trading desk?
Yeah, sure. When we look at in our high frequency setup, whenever we are looking at the hardware, it's always quite simple. You have to have a very high churn rate. So in terms of the moment a new version is out, a new improved hardware is out in the market, you go and get it. But more importantly, what we generally also do is that it's also a lot of you can say the enhancements that you have to do in your hardware. Now, there are certain firms who do it for you, but a lot of firms and most of the HFT firms actually do those enhancements themselves, because speed is their key alpha, right? And hardware, what kind of hardware you're using. So there are again multiple uses of what kind of hardware you deploy it for, but say if it is from the perspective of reaching the exchange faster, in that case it becomes your source of alpha. So your source of alpha cannot be something which is available out there or is commoditized. It has to be your own, right? If it has to be a real source of alpha. So that's one side which is more relevant from the high frequency trading perspective. But then of course there are if you're looking at the computational heavy funds, right? So who rely on massive amount of research and data that they deal with, then it's different type of hardware enhancements that they would be looking for. So it's not as much to do with doing things at the earliest, but doing a lot of things together and a few other things which comes into the play. So those who specialize into hardware, they can probably easily relate with that part. But yeah, if you have to just put it out your use case first, and in case if it is for more from low frequency retail kind of setup, then probably a decent whatever configuration you think is good for your office work, probably just notch it up by a few notches, and I think that should be fine, because it is not really that resource heavy in most of the cases. But if your strategy needs speed, or if your strategy needs huge computations, right, to be done, then you need server grade infrastructure at the least. So that's there.
All right. So I'm going to pick one last question, and I'm going to maybe lob it at Pradipta. This is a good question, interesting question that's come up. So once you have a cloud-based algo trading system in place, so the user asks, so we don't need to be attached to the screen all the time. I suppose the answer to that is true. I'd like to maybe extend that question. So if I have my system in place, a cloud-based algo trading system in place, can I, just let my strategies loose in the markets and go to the beach, have a couple of beers, and stay there all day? Can I do that?
You're on mute.
No, definitely you should not do that. So algorithmic trading is not fire and forget. So it is very, very important that you monitor your strategy performance and take actions if required. Now, ideally, those actions should be part of the strategy, but you cannot, as human beings, we cannot think of all the possible scenarios that your strategy will face itself. So it is very important to keep a monitoring. Of course, if you're running it in cloud, you don't need to stay there. There are better ways so that you can automate the monitoring as well. So for example, you can define thresholds where you get an alerts on your mobile phone or something like that. But ultimately, it is always important that you keep an eye on it. It's not fire and forget.
Great. Right. Wonderful. So we've exceeded our time by a few minutes, but I think this was time well spent. Thank you so much, all of you, Ishan, Nitesh, Pradipta, Rajiv, and even Kshitij at the very beginning. It's been wonderful talking to you guys in a slightly formal setup, still fun. And hopefully our users also have taken out a lot of value from a very interesting and I would say wide-ranging discussion we've had. We've spoken literally about skills you need. We've spoken about high-frequency trading. We've spoken about mistakes the rookie traders make, the quant traders make. So yeah, it's been quite the menu on offer today in just about an hour. So thank you again to all of you. Thank you to all our listeners and folks who have logged in and patiently heard us for the last 1 odd hour or so. And we will see you again tomorrow at the same time. All right, bye-bye. We're signing off.
Thank you so much. Thanks, everyone.
Thanks, everyone.
Thank you, everyone. Have a great day.